everyone to today's edition of Frontier Opening Bell. I am Bosin Amofaye. We're happy to have Ayodeji Ebo, the CEO at Afrinvest Securities, Ali Khan Sacho, who is the CEO and founder at Rich Frontiers Management in Nairobi, and of course, Ijema Onyeka, the industrial goods analyst at Vetiva Capital. Good morning, gentlemen. Welcome.
Thank you.
Thank you very much. Let's give you a quick wrap of African equities markets tonight, largely by the banking sector. The Ivorian market and Egyptian stock markets were negative, much bigger, a negative reading 2.3 in Cairo. Kenya was about 0.27%. I think that should be the first green shoot in the week. In South Africa, GSC 0.75%. The big stories around the East African market was the World Bank giving $2 billion direct facilities for SMEs in Kenya. That's good news. On the same day that the S&P revised Kenya's outlook to negative from stable. Meantime, British American Tobacco Kenya is reporting an earnings per share of 3.50 shillings. And Stanbic Uganda has notified investors that the Central Bank of Uganda has denied a filing for an exemption to pay tax, so there will be no discussion over dividend payment at the July 17th annual general meeting. That's tomorrow. Ali.
Yes. So good morning, boss. We touched on the S&P revision yesterday. It was basically moving the ratings to negative from stable. I think given what we know now, and given the impact of COVID, we can expect a ratings downgrade at some point later this year. I don't think we can avoid it. S&P was particularly concerned that we would not bring the deficit under control here in Kenya, given the electoral cycle. We have an election in a couple of years, and typically most discipline tends to get thrown out of the window around then. So, however, this will be a trend I expect will play out across the continent, east to west and north to south. You reported on Frontier Africa regarding this IMF facility of $2 billion for the SME sector here in Kenya. What I found interesting in the report that you guys made was that you were saying that the IMF was going to make these disbursements directly to SMEs, which is a very interesting a statement and a very interesting development. Because this must be one of the very few examples, I think, of the IMF dealing not through banks as intermediaries or other third parties as intermediaries between themselves and the SME sector, but actually dealing directly. So I think that's the first thing that really caught my attention. And I think it's interesting because politically it's quite a big step. And I think it's telling us that the IMF is not as invested in the government as they could be, or with the banks. 2 billion is a very significant amount. Of course, the SME sector here, Boyason, is very dynamic and is under tremendous pressure, which I'm sure is a phenomenon we're seeing everywhere at the moment. Cash flow has collapsed. Demand has fallen dramatically. So that this is going to be a significant booster shot and a shot in the arm. And I think I've got to give credit to the IMF for stepping up. BAT Kenya, interesting results. Revenue was down 6.7%, but EPS, first half EPS was up. That of itself is very significant in the current market we're in. Speaks to the resilience of the business, a word they used in their accompanying press release with those results. Interim dividend of 3 shillings and 50 cents. This is the premium dividend paying stock at the Nairobi Stock Exchange. And what's interesting is if you do an implied forward, you calculate how much they normally pay out, which is between 90 and 92% of the earnings per share, you're looking at a 10% yield prospectively. And we've had this significant slide in treasury bills to around the 6 to 7% area. So theoretically, the dividend here is 300 to 400 basis points over the equivalent risk-free asset. So I think you're going to see a bottom in this share, even if the stock market continues to slide. I think people will grab that cash flow, which is attractive. There were complaints about tax evaded cigarettes coming into the market, undercutting them. Complaints about government excise duty, which was increased in this reporting period. But, you know, a headline revenue loss of 6.7% in the first half of 2020 is something I think most companies would be quite happy with. Stanbic Uganda, biggest bank in Uganda, was listed a few years ago, was a real hot IPO. That's interesting that they're basically saying they wanted to pay a dividend, but the government stopped them, the regulators stopped them. And I think that's in line with what regulators are looking at worldwide, which is there are going to be significant credit losses. I saw JP Morgan, for example, put up their credit provisioning 10x, just to give you a flavor. So I think we're going to see this trend of regulators saying, no, shore up the balance sheet, be ready for this thing if it continues longer than you're expecting.
Yes, and shareholders can at least see this as their own contribution, as it were, to the COVID-19 period. You need to shore up the banking system. You can't take out this hundreds of millions of billions of shillings in dividend only for the banks to you get back to shareholders and say, oh, can you give us some of this money back? Because our capital base has been eroded because we're pushing loans and credits, impairments and what have you. I think it's a good decision across borders. We're seeing this from not just from Kenya, but a few other jurisdictions as well. Let's talk about the Nigerian West African markets very quickly with Ayodeji and Ijeoma. MTN Nigeria yesterday announced its onboarding eSIM for first of such in West Africa. That will take about 1 year, effective yesterday. Transcorp Hotels, a big name in Nigerian market, is doing a 2.659 billion rights issue at about 370 per share. Meantime, Ghana's inflation down to 11.2% year on year in June, and Societe Generale listed on the Ivorian market, the BRPM, we paid 273 CFA as dividend. Let's start this with Ayodeji very quickly. Ayo, what's your take on the market? And let's start with the fixed income yesterday, the results of the debt management office auction.
Okay, interestingly, I think before going into that, I think this morning the National Bureau of Statistics tweeted that the inflation rate would be released on Friday at 8:30 a.m., which we're all anticipating that would also be on the upside. Now going straight to the fixed income market yesterday, we, as expected, due to high level of liquidity, we saw the significant subscription, and as a result, all rates dipped across all tenors, with the 364 days closing around 3.35%. We know for most investors, especially for domestic investors, when you try to juxtapose your expected high inflation rates vis-a-vis the interest rate on fixed income, you can see the wide margin that there's no encouragement for people to save, and most people will also be looking for other opportunities. And we feel that this may also be a major reason why we are seeing pressure on the FX, because it really doesn't make any, it's not rational for anyone to continue to invest. But we know the fund managers have very limited options. So we'll continue to see that high subscription at that level. And going into MTN launching the first, onboarding the first eSIM platform, we feel they've continued to take that lead. When you look at the structure of the market, they control, for voice, they control about 43%. For data, they control about almost 50% market share within that space. So I think they are also just trying to take that lead. And they are also well positioned. We are also expecting that they are their sector is benefiting more from this COVID impact, because people are already making more calls and the use of data have also increased. So it's all working, all is working together for their good. And lastly, to touch on the rights issue, which for Transcorp, Transcorp Hotel, this I feel it's really not attractive for existing investor, because it's just like 6% discount to market share price around 4 naira relative to the rights price of about 3 naira 76 kobo. And if you also check, like I was saying, MTN benefiting from COVID-19 impact is also going to tell significantly on their revenue, because because of the lockdown. And if you check their Q1 2020 results, they declared a loss of about 600 million. And we feel with the high interest rate, finance cost, if you check their full year 2019, finance cost is about 4.3 billion. Yes, this rights issue will help restructure, but we feel regarding their top line, it's really going to be a very challenging year for Transcorp Hotel.
We're very interested there. Thank you, Ayodeji, bringing the Transcorp hotels and the pressure for example, when you look at Transcorp, very iconic building, a very big hotel in Abuja, Nigeria's political capital, and you just imagine the Congress Hall and all the halls totally shut down, emerging the millions and millions of losses on a daily basis that they reported during this pandemic period, and the rooms and the restaurant and whatever, that's a big loss. That if you look at, and they have assets in Calabar and elsewhere. Hey, Jema, very quickly, the Kenya story, is it very appealing to you that the World Bank is looking at $2 billion for SMEs, which are in the industrial sector, and funding them directly? Is that a story, something you'd like to see happen in the Nigerian state, for example?
Well, yeah. So we know that the large multilateral organizations have been coming together to see how they can help mitigate the impacts of the pandemic on small and medium-scale businesses across the emerging markets, if not across the entire world. We've seen the IMF. IMF disbursed over $3 billion to Nigeria in the same vein. We've seen the World Bank. Nigeria is set to get an approval of the first tranche of 1.5 billion of the $1.5 billion loan from the World Bank sometime in August, with another 1 to 1.5 billion set for sometime later this year. This is really just a continuation of that approach, and we know that a lot of these manufacturing companies have been hit hard. First off, in terms of their costs, they've had to their costs have increased significantly because of one, logistics and mobility restrictions due to the pandemic. Also, they've also had to introduce a whole host of social distancing regulations within the assembly lines, which in its own is some sort of expenditure that was not anticipated at the start of the year. This sort of funds for smaller manufacturing and industrial goods companies will definitely be relatively useful for these companies and going concern in this period.
Interesting. Thank you so much. We can use more of the World Bank approach, direct intervention to the SMEs. And the good part about the story is that even for individual entrepreneurs in Kenya, for example, Ali, for example, if he goes into music and he wants to produce music and he starts singing and he becomes an entrepreneur, oh well, he gets part of the $2 billion. That's good news. So that is very innovative, and I think that's a catch there. So Ali, if you're setting up anything new, you can tap the $2 billion. You still have the time. I've
been spending my evening studying that particular program, and it's I think it's going to excite a lot of people, and I think it's a really positive step. Obviously, the IMF have not got the experience typically in making those sorts of smaller loan amounts, but I'm sure they will. I'm sure they'll find it. The World Bank has experience.
Yes. The World Bank will use the development economists and the development unit, I think within the IFC, whatever. So we'll get details in the days ahead. I'm sure between now and the end of the week, we'll have a lot more details on this very innovative funding. Let's talk about Southern Africa. News coming through this morning was that the Southern African economy is ready to put pen to paper for about, let me just get that straight, $4.2 billion IMF loan by the end of July. That came into this morning to one of the national newspapers in Southern Africa. Meantime, the country's inflation slipped to 2.1% year-on-year in May. In neighboring Zambia, the authorities are saying, look, we're talking to the G20, 2-year moratorium on our debt. GDP will slip to 4.2%. That's what the Minister of Finance says. In Namibia, June inflation unchanged at 2.1%, also a shy of the South Africa's numbers. Meantime, Botswana's central bank is asking the government, or the parliament precisely, to put a law that will limit access to the country's sovereign wealth fund. Ali.
So that's interesting news about the IMF facility. We knew Tito has been speaking about that. He said he wasn't in a hurry, but I think clearly that's positive news, $4.2 billion out of the IMF. SA inflation slipping to 2.1%. I think this is more than a decade low for South African inflation. It's statistically a real outlier number, and I think speaks to the softness in the South African economy. You know, South Africa has been on and off in a recession for more than 5 years now. But I think the layer COVID on top, and you've taken the inflation rate right down to these record lows. Zambia is interesting. There was a report in the paper of a trial in Rwanda where this rebel who was trying to overthrow Paul Kagame is saying he was funded by President Lungu. So we got a bit of a political hot potato out there, which caught my attention. So minus 4.2% expected. Strong rebound in the copper price, which has been in a bull market as of this week on supply concerns out of Latin America, might help a little bit at the margin because Zambia is the second biggest copper producer in the world, so that's supportive. I'm not sure, you know, whether they can officially say that they've got a 2-year moratorium with the G20 as yet. I know they'd hired Lazard Brothers to advise them on a restructuring of the balance sheet. I know that they owe a great deal of money to China, so how China deals with Zambia is very important. But obviously, they have less than $1 billion in reserves. They desperately need a moratorium, and I think if they get one, that will be positive for Zambia and probably give a little boost to the Eurobond prices, which have been probably the second or third worst performing in the world. Namibia inflation, much tracking South Africa, frankly. Currency tracks the rand as well. Botswana, that's an interesting development. Botswana typically runs the most conservative balance sheet. It's very strong governance in comparison with the rest of Africa. And obviously, you've got legislators seeking to protect the sovereign wealth fund from a possible raid by the executive in this scenario that we find ourselves. So we should watch that closely.
I understand, because the size of Botswana's sovereign wealth fund relative to the GDP is very high.
It is.
So you don't just want some guys overnight, some vultures kind of just dip their hands in the sovereign wealth fund and off it goes. So better do a firewall around it. Very nice way. Let me ask Ichema and Ayodhij very quickly their take on Nigeria's inflation expectation for tomorrow, but more importantly, since we started the new year. Ayodhij, give me a minute here of our inflationary trend since the new year started.
Yeah, Yes, the inflation rate have continued to be pressured upwards, and due to a lot of this has been due to a lot of factors. Looking at the core inflation, that's the sub index yield, which is mostly influenced by FX, and we've seen that depreciation, whether it's depreciation, devaluation, or adjustments of the naira. We've been seeing that impact on the prices of goods, and we expect that to continue to pressure the headline inflation, because most of the transactions in the last 1 or 2 months have been carried out at the parallel markets FX segment. And also for food inflation, because of the way the agri sector is still structured, where it's seasonal, you see the planting season, and the harvest season. There's really no that storage mechanism. That gap is still very missing. So you see that price fluctuation always affecting inflation. And with the impact of COVID within the second quarter, that also impacted on prices because of supply chain bottlenecks. So for us, we see that inflation rate will continue to be on the uptrend, and we're projecting about 12.8% inflation rate. We expect that it will cross 13% before the end of the year.
I think. Do you think inflation since the beginning of the year, do you think it has had any impact on the stock market in terms of the companies in the industrial goods sector where you have the heavies, whether they are cement makers or so?
Yeah, definitely. We've seen the impact of inflation in many facets on the cost of sales and the operating expenses of the major manufacturing companies. And then when we think about, I think the only positive trend in terms of pricing was the floor prices, which went down sometime between February and March, if I remember correctly. And we saw that we expect that would impact their college expenses sometime in within the Q2 batch. However, the impact of that has been largely cancelled out because we've had floor prices go back up. And even then, even when floor prices were still lower, we still had mobility restrictions interstate. We still had higher logistics expenses due to the restrictions from the social distancing and the pandemic. And so the overall impact on their books have likely been negative. We're expecting higher electricity tariffs sometime this year. Even though the timing and the political scenario on that is still a little shaky. But it's something that is expected and to have an impact on their cost. Overall, the overall core inflation tends to affect the operating expenditure of the manufacturing company significantly, and as the CPI continues to grow expectedly, we expect that these guys will be impacted. On the FX impact of the manufacturing companies, like IRDG rightly mentioned, the impact of the cement guys is largely limited. One, because it comes in one of two forms. It comes in either their cost of goods sold or their operating expenses, or it comes in their finance costs. Now, across the major cement producers, all of them have largely moved away from their USD denominated loans, so they no longer have any FX loan exposure. They do very little. And on the manufacturing and operating expenses side, the only major exposure we have is the price of gas, which is one of the major kiln fuels used for the cement. Now, the price of gas is indexed in USD and will be affected by the change in the official FX rate from around 307 to 360 something, around 380 something. And so that's the major impact had, because largely all their costs are very localized, with the exception of one minor imports, which is gypsum, that accounts for less than 5% of the production costs.
Interesting how the exchange rate adjustments and inflation, the price adjustment also in fuel within the second quarter will play out for the numbers when they start coming out in a few weeks' time. The biggest story, thank you, Ijoma, the biggest story north of Africa was Afreximbank putting 3.55 billion US dollars in the pocket of the Egyptian Central Bank and another $300 million into intra-Africa trade. I don't have any other stories from North Africa more than that, and I'm chasing this money. Ali, this is a whole pot of money, $3.5 billion from Afreximbank with the headquarters in Cairo for the Egyptian authorities. This is a show of confidence. I don't know, that's the first one.
Absolutely. I think Egypt earlier in the week announced they were going to increase their shareholding in Afreximbank. Afreximbank is situated in Cairo, but you know, 3.55 billion from Afreximbank is a significant chunk of change for Afreximbank, and I think it speaks to the confidence that Benedict Oromo and his team have that Egypt is pursuing. So very big statement. I think Egypt will be glad to receive that level of affirmation in their bona fides, and then $300 million for trade as well is very supportive. Obviously, the stock market was a little bit weak yesterday, and we've got two big political storms swirling. We got the Libyan situation where Sisi is very unhappy with the Turkish push. I think he's drawn a red line. Apparently, Parliament is on a hotline with the military in Libya who are having to report on a real-time basis. And then you had the other report out of Ethiopia that they've started filling the dam. And bear in mind that Ethiopia, under a previous agreement, were meant to inform Sudan and Egypt before filling that dam. So there's a lot of stress around what exactly Ethiopia is up to and how will Egypt respond to that. So those are two things to just keep in mind, which might have been what undercut the stock market yesterday.
I took the Afreximbank story, funding $3.5 billion very seriously, Ali and the rest of the panel, because it goes along the AFDB's North Africa Economic Outlook report, which was out this week, saying Egypt will be a booster board for the North African region again because of trade. So additional $300 million there will help them. And with this $3.5 billion going into this financial system, already disbursed into Egypt's central bank and into the banking system, that will also expect to boost confidence in the Egyptian stock market and in the currency as well moving forward. I'm sure we'll have a lot more conversation on this. So thank you everyone for coming on the show today. Let's leave it here for this Thursday on Frontier of Libya. Thank you very much, Ijoma Onyeka at Vediba Capital. Ali Kansatu, thank you for Nairobi with Frontier Management. And Ayeri Jebo, thank you from Afrinvest Securities in Lagos. Thank you, and do have a great day. We'll see you again next time.